Good morning to all traders and welcome to another daily market insights video provided to you by Orbex. Today is Tuesday, July 30th. I'm pretty sure you've all seen how the pound is plummeting. It went to lows around 129. Actually, as we speak, it keeps falling. And this is because, mainly actually everybody would think that this is because Boris Johnson went out and said that Britain would leave the UK, the EU without a no deal. And this is the mandate for the government now to start preparing for a no deal exit. Now, the thing is that I didn't really see euro moving on that, right? I mean, if that was the reason, that the euro would move down as well, right? It didn't happen. So what does this mean? It means that, if you ask me, right, I believe that the market is pricing in a general direction, right? So the risks at the moment, right, because we're not in October yet, the risks of a change in government to a Corbyn-led government, this is what is actually adding a lot of pressure to the pound at the moment and also the forex markets. Now, on the other side, we've got the dollar as well, which is actually performing quite well considering that the Fed is likely to cut. There might still be some move to the upside because economic indicators still show very good results in the UK, but I mean the US. But I think tomorrow we're going to see the dollar plummeting as well. Now that is probably likely to help a little bit the pound, but if the narrative doesn't change from the government itself, I think we are risking of seeing new fresh lows to 120 and even lower. Now, for the day, we've had the Bank of Japan already decided on the interest rates. Of course, nothing changed, nothing changes. It's been so many years that nothing changes actually in Japan. So anyway, the dollar yen is a little bit supported because of this. We have the GDP in Europe, but in France, the conference, of course, that is probably going to increase or decrease the yen flows a little bit. And then, of course, German CPI, very important. The PCE price index, very important for Fed's policy. Pending home sales in the US, and the most important for the day is the CB consumer confidence, okay? If we see a good figure again, and they're expecting a very good one, to be honest, then that is going to be positive for the dollar, but that might be the last time for this quarter that the dollar is going up, okay? So let's jump into the charts quickly. I want to start with pounds, okay? So pound actually has moved exactly as we moved, right? I'm still expecting this to end down here, as I've been talking about that play for a while now. 3, 4, and wave 5 down there. Now let's see how this is likely to play out. Let's go down on the 240 minutes for our chart. Now, okay, so we've got 1, 2, 3, 4, 5, okay. We've just broken below that level, and we're still looking to move probably wave. Okay, so this is 1, 2, 3, 4, and 5, right? That's one scenario. We're going to end wave 3 around 120, and then we'll go down for wave 5. It can end anywhere between, I mean, anywhere between below 120, to be honest, right? We see actually there is still room for the pound to move lower. Below we have, although we have a very, very, very strong support at that level, which is 1996. Okay, very, very strong support level. Now the other scenario would be this. The other scenario would be that we're going to go a little bit low. If we see this as a leading triangle, wave 1, wave 2, wave 3, wave 4, and then wave 5 down here, right? So we're looking at, after breaking this triangle, we're looking at a very, very interesting move to the downside, a sharp decline, okay? It's probably going to, stop right here at 1996 and then start reversing, okay? Normally, sharp drops are followed by sharp reversals, let's say, when there is a very strong support or resistance level, right? Now we could see, of course, that breaking, and we're going down to 118.36. We don't know, but there is still room to the downside. And now with this decline over the past few days, having also the Bank of England decision on Friday, how is the game plan going to change, right? That's very interesting to watch. Now, I want to go quickly on the dollar yen as well. On the daily, we're still moving exactly as we expected. Okay, so we're still waiting for wave C over here to end. So 1, 2, 3, 4, 5, and 1BC. We're expecting that to end around 105, if not mistaken. But we really need to pull a Fibonacci, which I've forgotten to do, sorry, from there to there and see where the 78% is. If I'm not mistaken, it's around that level. Now, we do have some signals that show that that could turn bearish very soon, and that would support, of course, our scenario. And also the Fed's narrative to cut rates. So we're seeing this as an 1, 2, 3, 4, 5, and ABC, okay? We still see this as an impulsive move to the upside. That could end around the top of this channel. If that is the case, then we have this zigzag, of course, WXY pattern, and from here around 105.58, which is the Fibonacci, 50 Fibonacci of this move, we're looking to start selling. Now, the other scenario, it's pretty similar. It's just that, hold on, yes. That scenario, actually, how it's likely to play is we'll have one wave, 2, 3, 4, and then we'll go for wave 5, 4, and 5. So we are now in a correction, and we'll go up wave 5. That could end around 109.5. We can even go up to 109.97, which is 110 pretty much, right? Because that would be the expansion of this wave, okay? Wave A. We are in a correction anyway. This is wave C. Now, that's the one scenario. Like the other scenario would be that that's ABC is ending right here. It's actually pretty much ended with wave 1 being that one, wave 2, 3, 4, and 5. Not as much as extended as we expected, at around 109. We're seeing now the the move to the downside. What we want to see, of course, for that to happen is a break below 108.28 and then 107.96. Then our level will be the ascending trend line. Once we break below that level, we are done, and we're probably most likely looking at 105 or lower. Of course, Fed's decision is going to be very important. Now, I want to thank you for being with me for another day, and as always, I want to remind you to visit our blog, where we cover the latest ideas, providing all the necessary tools traders need to trade successfully.